Hola guys, what's going on? Que paso? This is Hala Pablo. How's everyone doing? Bitcoin. We're going to look at Bitcoin again. We're going to be doing Bitcoin and Ethereum every 2 to 3 days as we're in this crucial time frame in the markets right now where I believe we're seeing a series of redistribution ranges, and we're watching them play out, and we're looking for any kinds of change of characters or change of behavior or anything like that that can give us an indication that the pump or the dump is coming. So right now, I did Ethereum yesterday. We're going to go ahead and do an update on Bitcoin today, and these videos should be brief. So hope you get something out of them. If you do, go ahead, and I'd appreciate it if you'd like the video or subscribe. So that would kind of give me the encouragement of doing more and more of these. I know it's not falling on deaf ears. So anyway, let's go ahead and get started. So my prior video, I had the bull traps. If Bitcoin does pump, if it does happen to come out of this and break micro trend resistance, then we very well may see a pump. And these pumps are designed to entice retail traders into FOMOing in, thinking that the markets have reversed somehow and Bitcoin is going back up to 40,000 or whatever it is. And so what what they want to do, their goal is to get you to buy in, and with the full intention of selling into the pump. That's what the market makers do. They sell into pumps to retail makers. The retail traders buy into the pumps, and therein lies the big difference between retail and institutional. And once you buy into the pump, they already have these bull traps or these order blocks up above, which are really just liquidity voids. Here's the first one, and here's the second one, and you can count on them taking massive profit in these areas if Bitcoin decides to mark up. I don't know if it's going to mark up. It's looking very, very bullish. I'm sorry, bearish still. And we can see this as evidence in the volume price action, or the relation between price action in the spread in the candles and in the intensity of the buying and selling pressures. So here, what we need to look at, since we're in a bear market, is we focus on the pullbacks. Here's a nice pullback right here. Here's another pullback here. Here's another pullback here in these ranges. We won't count this because this was part of the initial selling climax, and this we can call the automatic rally, or maybe it's a buying climax, depending on how you look at it, as it comes out of this inverted head and shoulders. This would be the upper liquidity, the macro void, and if they do pump, this would be an area that the institutions would retest and dump a lot of their Bitcoin at here. So we're not going to concern ourselves with that, but what we will do is look at the pullbacks and the places where the price action touched the upper, the resistance, the trend resistance, and what exactly was going on in the volume, and to where we are presently here. So on these pullbacks again, and I'm on the 1 hour time frame, you get an even better read on the 30-minute or the lower time frames. If you wanted to go forensically and see, really, you want to track the footprints of the composite operator in their buying and selling orders. But the hour time frame right now is giving us a good enough indication. So we're seeing increase of supply. Supply is building. You can see that clearly here as these red volume bars are growing in intensity, and that is all taking place during the pullback. So you have the pullback going down, you have supply volume going up. This creates a divergence. It's a bear divergence in VSA, and it just reinforces the selling pressure or the selling power. So the bears are fully in control here. And then we have another pullback here, and again we have the increase in supply. And also it's noteworthy to look at on the impulse waves up we're looking at decrease in demand. So for bearish confirmation, you want to see an increase in supply during the pullbacks, which we have, and a decrease in demand during the upthrusts, which we have. Let's see if there's another one. Hasn't really been that many upthrusts. It's been mainly down. Here's an upthrust here, this area here, and we have a predominant loan demand volume spike. But this volume spike was unable to push through microtrend resistance and continue the rally, so it was stopped out here. So I would count this as a failure to rally, which is another point for the bears. And then here you see these, let's see if I can blow this up a little bit more. See these decreasing bars in the demand here. This building, it's like kind of like a skyscraper, but the top is angled down. Yeah, that is a decrease in demand, and that took place during this little motive wave, this little Elliott wave here. And so demand has been decreased, and then we have a bunch of predominant supply bars here during this period of lateral consolidation, and then another pullback with mega high increasing demand. And again, now we're in another area now after this pullback where we are kind of retesting this floor that we've arrived at, which is the lower lows of this area here, this prior low, which could have been like a spring, I guess, or terminal shakeout for this in preparation for this micro pump that never went anywhere, incidentally. We are down again, testing this lower liquidity void in a pattern of lateral consolidation, and again we're seeing an increase in supply. You see that? You see those two candles, these three at the end that are showing up lateral as this trends laterally, and at the same time demand decreasing. So this all tells me that the bearish bias still prevails for Bitcoin, and I think we're going to have a period of a little bit more of this sideways crawling, and we may come back up, retest the microtrend resistance. If we break through resistance, just remember these bull traps up here in these like liquidity voids. Here's liquidity void number 1, liquidity void number 2. So if you are going to go long and you want to make a little bit of money and you don't want to short or leverage trade it right now, then just keep these areas in mind, the 17.2 to 17.5 as the first area to take profit or get out altogether, and then the second one occurring at 17.8 to 18.1, that area there, as the ultimate UTAD, or up thrust after distribution, and to seriously consider taking profit or getting the hell out up here, because it's fixing to come back down like a freight train. And when it does come down, it can retest or reach for the first time any of these 2 or 3 Fibonacci retracement levels, the 1.618 golden fib retracement being 14.3, but it certainly could go lower than that. So just keep an eye out for it. Be safe, and hey, have a great day. Go ahead and like it if you got anything out of this. I enjoy doing technical analysis. You're never going to get any kind of fluff from me. I know these videos aren't fancy, but I'm just giving it to you straight as to what I see. I trade full time. Been doing it since 2017, and got nothing to sell. So just trying to help people. So if you're getting anything out of this, like, subscribe, and if you have a coin that you want me to do, if you have a special coin or altcoin, leave a comment or something, and when I get around to it, maybe I'll do a chart on it, and upload it to TradingView. So anyway, all right, this has gone on long enough. You guys take care. Have a great day. Adios. Bye-bye.